Hey everyone, how's it going? It's Thomas back at you with another video. Today, I'm going to be talking about one of the possibly best investment strategies that I think there is out there. And, a lot of times we'll talk about various stocks that have performed very well and ones that we anticipate are going to perform very well. But I want to talk about not so much a stock. What I'm going to talk about is index funds. So this video, I'm not going to go super in depth on all the details, but I do want to talk about why I think that it's important that you have them in your portfolio, why I think it's important that you consider putting a majority of your investments into these. Index funds, I think, are an untapped gem. I think a lot of people know about them, but a lot of people don't know what they're doing when they invest in them. They don't know how to invest in them. And so I'm going to try to cover some of these things, but most specifically, I want to cover why I think you should be investing in them. So I'm going to just go ahead and pull up a couple things here for you guys to look at. So I'm going to start off with NerdWallet. It's one of my favorite websites. And as before, I'm going to link all of these articles and all of these sites, at least the ones that I can, down below for you guys to look at, because I want you guys to always research what it is you're doing. Don't do something you're not informed in, especially with investing. Always know what it is you're getting into. But essentially, index funds. So the point of an index fund is that it tracks a certain company's index or a certain fund's index and attempts to replicate it. Now, the thing is, they always will perform less than the actual index itself. But the reason for that is for fees, for costs, all things like that. And so essentially it cuts into it. But the reality is index funds have a tendency to constantly perform well. Very seldom is it that they lose. Now, obviously, they're not always gaining, but they are a guaranteed stable investment. So when you invest in index funds, you're not just throwing money into the wind. This is not penny stocks here. And, I think there's a time and place for penny stocks, but I think that an index fund is one of the more proficient ways to go about it. Okay, so essentially, there's a ton of index funds out there, and you might be familiar with quite a few of them. The big one is obviously the S&P 500. And this right here is a chart of the returns of the S&P 500 since its inception. It has averaged about a 10% return. And, each year it had some down years, but I do want to point out that the big ones, 1974, 2002, and 2008 were all kind of, 2008 and 1974 were recession years. 2002, we were just coming off of the technological bubble. And so, it had some downfalls, but nonetheless, it had about a 30% return in 2019, 16% in 2020. So consistently, it has steady returns. And so if you're not familiar with the S&P 500, essentially what it is, it's a blend of funds. It takes the 500 biggest stocks on the market and puts them all into one essentially basket. And so it's like a pre-diversified portfolio that you can invest in. So when you invest in it, you're essentially investing in all 500 of those companies. And so, that's essentially the biggest strategy of investing, is that you diversify your portfolio so that when there's small losses, there's other gains to weigh it out. And so the S&P 500 is essentially already accomplishing that for you. So the big thing that I want to focus on here, though, is the consistent returns, about a 10% return each year. And here's the thing. Sometimes it will experience loss, but the reality is the market is growing consistently every year. It grows. The market does not shrink. It's because we have more money flowing in. It's because we have more funds coming in. It's not getting smaller. And so a 10% return each year, give or take, now with some bad years in there, but a 10% return over time for the next 30 to 40 years is going to be huge. That's a lot of money to have returned into your portfolio. And that's just off of one fund. Imagine what would happen if you invested in about 20 different index funds. Now, obviously S&P is the biggest one, but the one I want to point out, and I think that's really interesting, is the NASDAQ 100. And essentially the NASDAQ, what it does is once again, it's a blend. And I've got the article here from Investopedia. It's a basket of the 100 largest, most actively traded US companies. The index includes companies from various industries, except for the financial industry, like commercial and investment banks. These non-financial sectors include retail, biotech, industrial, technological, healthcare, and others. I think that we can expect a huge boom from this one. Not that it's not already growing. So if I go back to this previous one, this is on Morningstar. Morningstar is one of the top companies for reviewing financials. They're right there with Moody's, who also does reviews of financials. They give ratings on each of these things. So if you're wanting to look into companies, Morningstar is a good one. They do give their ratings on here. So the NASDAQ 100 is given a 5-star rating for 3-year, 5-year, and 10-year. And overall, as a fund, is given 5 stars. But over the last couple of years here, consistent growth has been experienced from it. And obviously, we have, again, some dips here. This is in 2018, a little bit of a dip after 2019, but consistent growth. And, I'm going to jump right over here. I just want to point out some of the stocks that are in the NASDAQ. So Adobe, Google, Amazon, Apple, eBay, Facebook. These companies are not going anywhere. So Google right now is, in a sense, growing quite a bit, and they're starting to expand into other companies. Not that they were not before, but they're continuing to do it. I think technological investments are some of the best investments that you can get into. They're super beneficial. And so the world is not going backwards. We're heading towards technological advancements, whether or not we get some hiccups here and there. It's going to be happening. And so to put a majority of your investments into a index which invests in technological and biotech, I think is a huge advantage to you as an investor. And so regardless of, maybe you don't want to invest in technology, and that's fine. That's the thing about index funds, is there's so many varieties of them. You can invest in so many different things. And, I'm not going to have time to necessarily get into all of them, but I do want to point out that you can invest in various funds. You can invest in so many different types of index funds. You can invest in a bond fund. You can invest in foreign funds. You can invest in industrial. That's with the Dow Jones. You can invest in tech, like the NASDAQ. You can invest in the biggest companies. You can have so much variety in how you want to do this. And so with that being said, I want to encourage you to also research before you go and invest in these things. Don't just invest in any company. And one other thing that I do want to point out, I'm going to just jump over to Charles Schwab. This is what I use for investing in it. There's variations on what you can and cannot do as far as investing in a fund. Now, these are, I did not put a very specific criteria on here. I just basically selected 4- and 5-star ratings according to Morningstar. But there's certain funds that you have to meet certain qualifications. So obviously there's a variety of funds right in here: financial, municipal, foreign, real estate, corporate, large growth. Now, the thing is, some of these have transaction fees. So when you buy into the fund, you have to pay. Some of them have a load fee. Some of them have certain investment requirements. This one right here, the intermediate core plus bond requires a minimum investment of $1 million. So you have to be willing to put $1 million into it. However, it's got about a 16% return on 1 year. So 16% off $1 million is not too bad. But, ideally, we don't want to spend $1 million. And that's why you got some of the smaller ones. This one right here, we got $100, $100, $100. Some of these are a little bit higher, 2,500, 2,500. But the average return is roughly around 10%. You have some lower ones down here. You got like the 2%, but also, there's variations on why that is. It might be because of how it chooses to invest, what it's investing in. Some of these are smaller. But a 10% average return over the life of the whole fund is a pretty good investment, in my opinion, especially if you're putting this into your retirement. I use these for my Roth. I think that they're good for long-term investment, good to hold out, let it build over time so I don't have to touch it, especially when it's a passive investment. So that way, lower costs overall, and it's going to be a much better return in the future. Now, I do plan on making another video, hopefully going a little more in depth on this, talk about the actual details of it, but I wanted to point out the importance of investing in this. I think that people are not very aware of it. They don't see it that often. They don't know what it is. And I just want to bring that awareness to you. I want you guys to go ahead and look for these various funds, see where you can invest, see what you can invest, and start getting into it. Because it's one of those things you can put it in and don't touch it, and it will grow over time. And so, obviously it's going to have ups and downs just like every other stock, but it has a track record of consistently performing with the market. And so I think that that's an investment that you cannot necessarily go wrong on. So I think, just go ahead, do your research, look into these, find out what it is that you want to get invested in, find out what it is that looks interesting to you, because there's so many options. You don't have to invest in just one type. You can invest in various types and have various outcomes of performance. But as far as investing goes, I would say like index, much better alternative to individual stocks. Individual stocks, they have their ups and downs. But why invest in one stock when you can invest in 100 different ones at the same time? It makes so much more sense, in my opinion. So that's going to conclude this video. Make sure to like, share, and subscribe for more content like this. I plan on getting some more videos like this out there, hopefully going a little bit more into it. I'm also looking to start a new series soon, so keep your eyes out for that. And let me know in the comments what you think. I want to hear from all of you guys. Thanks so much for all the new support. I really appreciate it. I'm slowly growing here, trying to hit 500 subs here in just a bit. We'll see what happens. But thanks so much, everybody, and I hope you guys all have a good one.